This Dashera, the gold prices in India touched a record high of rupees 62,000 per 10 grams. But did this prevent Indians from buying gold? No. We bought a huge quantity of gold across India on the occasion of Dashera. The love of Indians for gold is known world across, as we buy a large amount of gold on every possible occasion. We are world's largest gold importer country. We have about 6% of the gold as reserves. That's what RBI keeps. But our households, they are claimed to have about 25,000 tons of gold, one of the highest in the world. We also buy on every possible occasion. Akshay Tritiya, buy gold. Diwali, buy gold. Marriage, buy gold. Child born, buy gold. So we keep buying gold across. But do we produce that much of gold? No, we import it. But it is the most unproductive asset, as maximum gold and gold jewelry is kept in lockers and only used on ceremonial occasions. Thus, this import puts a huge cost on the foreign exchange and raises the ratio of dollar to rupee to a new low. Also, this quest of ours for the new gold leads to smuggling. So, what's the way out? Can we reduce import? No. Then, what can we do? We can go for gold ETFs, that is the digital gold, or buy the digital gold. But no, we don't like it. So, government also brought in another issue called sovereign gold bond. Now, what are the sovereign gold bonds? Let's see in today's video. If you have till now not subscribed to our channel, please subscribe so that we are motivated to work more. This scheme was launched in November 2015. The aim of this scheme was to reduce the Indians' love for buying physical gold. This provides for a safe haven as it is issued by RBI on behalf of Government of India. What it provides for? First, a tenure of 8 years, which allows you to get out after 5 years if you so desire. It gives you 2.5% tax-free interest paid semi-annually. Also, a KYC with PAN is a must, and on maturity, that is if you keep it for 8 years, there is no long-term capital gains. Then comes the question, how to buy? It can be bought from the post offices, branches of various banks and Stock Holding Corporation of India. The issue price is fixed by the RBI based on the last 3 days price of gold published by Bullion Council of India. The trust can buy maximum of 20 kgs. This has to be bought in Indian rupees only. Please remember, the retail investors, they have an advantage. They get a discount of rupees 50,000 on the issue price per gram. Then minimum 1 gram can be bought, or maximum of 4 kgs per individual in a year. Details of PAN, bank account, etc. are required. The cash payment is accepted only up to rupees 20,000. The single or joint holding is permitted. Also, it can be bought for the minor through guardian. Then, if you have bought it, then how to redeem it? The price again is fixed by the RBI based on last 3 days price of the gold published by the Bullion Council. It is redeemed in Indian rupees. The amount is credited to your bank account which you had given at the time of buying this gold. But you may say, I have changed my details. Then what? Then you should promptly get it changed by submitting the requisite forms to your bank or post office from where you have bought it, so that they can be updated. You can also redeem it after 5 years of holding, or if you have bought it on a demat form, then you can trade it on a stock exchange if held in demat form. Now comes the question of taxation. You cannot miss the taxes. If held till maturity, that is 8 years, there are no long-term capital gains tax applied. That's the tax-free. If you sell before the maturity, then long-term capital gains applies. But if you hold it more than 3 years, then the benefit of indexation is allowed. Of course, the interest what you receive semi-annually is tax-free. If these are the conditions, then what are the advantages of buying over physical gold? First and the foremost, no tension. It's not held physically, so you don't need lockers, you don't need security. It is safe. Also, it is backed by RBI, so no question of fraud. The Additional income can be used which is not available against your physical gold. Also, you can use this gold bond as collateral when you are taking any loan, be it for housing or other things. It's easy to dispose of as it's in a bond form, a certificate, or holding it in demat form. Very easy. You can sell it on a exchange itself, and the money can be easily available instantly. You can also gift it. You can also create a nominee for this. Also, it's very easy to transfer. The process is very simple. The valuation is transparent because you come to know the price which is going to be given to you while buying and selling. Also, there is no loss in form of cost of labor, mixing, etc., which is the case in the case of gold jewelry. Also, buying this gold in Indian rupees in demat form saves the valuable foreign exchange. We are not a foreign exchange surplus country, so we must save it. These were the advantages of sovereign gold bond. But there are certain interesting facts which still point to the fact that we are the gold loving nation. The sovereign gold bonds or the SGBs worth 56,762 crore were sold between financial year 17 and 23. That equals to 122 tons of gold, 122 tons. In September 23, that the latest SGB trade which was announced by the RBI, the total amount spent was rupees 6,914 crore, equivalent to 11.7 tons of gold. The country imported rupees 17 trillion worth of gold in FY17 to FY23, equivalent to 5,646 tons. Imagine the amount of money we are spending on a dead asset like gold. However, it will be interesting to note that if you had bought the first tranche of SGB released on 26 November 2015 and just about to mature next month, you would have got a tax-free return of 10%. Hence, buying SGB is a very good option if you are looking for a long-term appreciation, no janjat of holding, locker, etc. Go for it. That's all. If you are still not subscribed to our channel, please subscribe, like, share, and thank you.